but ultimately we got a little over 32R in 2 months, which is amazing. Like I'm really pleased with this strategy, but it's really cool. It combines kind of data to give you an edge just from a general bias standpoint with some technical analysis. What's up, guys? It's Oxford Bonacci. Hope you had a good Valentine's Day, or if you're single, hope you got some self-care night. My girlfriend and I went out and saw some improv, had some fun, but excited to share with you guys this new strategy I've been working on this week for Asia session. I know we've been doing a lot of New York session indices strategies recently, and so trying to branch out a bit and try and find something that you guys can trade during different sessions, Asia and London session. This one in particular, whether you're outside of the US and can't trade New York session, or even if you work in the US and this could be a good strategy if you're working all day to trade in the evening potentially. It's a strategy I came up with the help of this short from SMB Capital.
A very, very simple but often misunderstood trading opportunity. If the range after 12 o'clock is greater than the range before 12 o'clock, so 9:30 to noon, noon to 4. If the range in the afternoon is greater than the range in the morning, there is a very low likelihood of continuation in the direction of the trend. A very low likelihood of that. It can happen, and when it happens with intense magnitude. But there's a very low likelihood of that happening based on the backtesting we've done.
So basically what he's saying is if you take a look at the 9:30 Eastern to noon Eastern range, the like high to low from that morning range, and you compare it to the afternoon range from noon to 4 p.m. Eastern, based on the size of those ranges, if you compare them with each other, it gives you some insights on what the following price action is likely to do. And this is a really cool concept. It's not really something that I'd heard of or thought of before, but I figured I'd test it myself. So I went ahead and downloaded like several years of XAU USD historical data, just Googled around and found some data, and gathered some information on this for like the last 6 months to see if it lined up with what they were saying. And so for each day, I kind of took a look at, how did the afternoon size compare to the AM size? What was the direction of the trend during that kind of New York session? And then basically looked at if we're looking at these two kind of ranges, if we're expecting a continuation, I'm expecting price to basically come back up to and beyond this New York PM high. If we're expecting a reversal, I'm expecting price to come back down to at least this New York PM low. So that was kind of like basically what I was looking for. If we're looking for a continuation and reversal, do we at least hit those levels after the PM session's over? And then kind of took a look at kind of the actual closes next day as well, and got some pretty cool analytics. I did want to mention for this strategy, obviously with CFDs, the markets are usually closed Friday evenings, New York time, until Sunday evening. And so basically what we'll do for that is we won't obviously be taking any trades Friday evening, which would be over the weekend when CFDs are closed, but we will use New York sessions from Friday in order to potentially take some trades on Sunday. And that's how the data flows through FX Replay as well. So that should work. If you're trading Tokyo time, it'll basically be Saturdays. New York sessions will basically help you figure out how to trade on Monday. So it's shifted because the time zone differences. But yeah, taking a look at the data. So based on, if we were expecting continuation from the PM session being smaller than the AM session and the trend was bullish during the session, there's a almost 90% chance that it'll at least hit that New York PM high. For a bearish continuation, so price was trending to the downside and the PM session was smaller, there's still 64% odds. For reversals, I saw pretty similar. If we were trending to the downside and that PM session was larger, we expect a reversal to the upside. Almost 90% odds of that happening, and then slightly lower for bearish reversal, but still, at least half the time. So pretty happy with kind of the initial data on that. I also took a look at the actual daily closes the next day. Not quite as high, but still, any edge is really just an indication of one thing being more likely to happen. So even the closes the next day also show pretty consistent data. And this is kind of the data from his that YouTube video, and he says very likely chance, or not very likely, but it's really like 2/3 of the time for both of these that you'll see reversals in the case that he was talking about when the PM session is larger. I took it even further, looked at like day by day, and pretty consistent across the days. Maybe maybe Wednesdays are slightly lower just from this 6-month sample size, and then just again like the last 6 months, gold has generally trended to the upside, so it makes sense that most of the kind of bullish instances are kind of higher odds. But over a larger sample size, you really want to see uptrends, downtrends. How does the edge play out with both? So that's basically the data behind the strategy. And so kind of looking into it, as I mentioned, we're going to be looking at ththese two ranges, 9:30 to noon and noon to 4. And again, I mentioned kind of for Fridays, we'll kind of use the New York ranges from Friday to look for trade directions on Sunday evening. But yeah, basically if the PM range, so the noon to 4 range is smaller, you saw is like 0.5% or 0.54% versus 0.61%. If it's smaller, then the AM range, we're going to expect continuation, kind of whatever the trend was from the open to the close of New York session, we're expecting a continuation in that case. And vice versa, if the PM range is larger, we're going to eventually expect a reversal of that trend. Might not happen immediately, but that's kind of the general bias that we're going to be using to set kind of our trade direction for each day. The strategy details, there's a few different indicators we'll be using. I'll show you guys. It's a slightly different indicator on FX Replay versus TradingView. There's this nice trading sessions indicator on TradingView that you can kind of customize the times to get those time ranges and everything like I have here, kind of these ranges shown on the chart. This is from TradingView. You can kind of see that, and you can get the settings to show you like the tick values as well. And then we'll also be using a fractals indicator to help mark out like highs and lows, so it's pretty easy for you guys to see those consistently. We'll be using a fair value gap indicator and a session indicator to mark out the Asia session, basically when the Tokyo hours are. For the entry model, we're going to be basically like waiting. So say we're looking for a long, maybe the previous day before we had trend to the upside and the PM session was smaller, we're looking for longs. We're going to first look for a sweep of honestly any New York PM low in that case. From my experience trading gold, I used to trade it quite a bit with another strategy last year. It really doesn't like to go anywhere until it takes some liquidity first. So we want to see a sweep of like a New York PM lower high away from the trade direction we want to trade. And then after that, we want to make sure we see like a valid liquidity sweep. So if it's a long, we want to see a lower low followed by the inverse fair value gap, and vice versa. If it's a short, we still want to see a higher high before the inverse fair value gap. And for those of you unfamiliar with inverse fair value gaps, they're basically just similar to a breaker, like a fair value gap that's not respected. So you can see here, but with these 3 candles, there's no overlapping wicks kind of before and after this candle that forms this fair value gap, and then it becomes an inverse fair value gap once you get price closing above it. So you got to wait for the close. Like a wick above it isn't confirmed. You got to see a candle close, but then once it's closed above, then it's an inverse fair value gap, and hopefully can then be used to support price to the upside. And we'll be using retest of these fair value gaps for some cases, and kind of market entries in other cases. We're going to go through both of those. So most of the time you'll be using kind of after the inverse fair value gap shows up, you'll be using a retest of it for your entry with a stop at the most recent kind of lower high. And then we're going to be targeting basically the New York PM session high or low in line with the trade direction. So as I kind of showed here, in both these cases we were looking for longs, but the target is going to basically be like that New York PM high for longs or New York PM low for shorts. Sometimes you'll need to look for the next low or high to give you that at least 2R, but we're going to be looking for more than 2R for this strategy. And some instances, it doesn't happen that often, but we'll be using market orders instead of limit orders when we place our kind of position tool on the chart and using the recent lower high for our stop and our target of that New York PM high or low. If we can get at least 2R with a market order, we're going to go ahead and enter then, because sometimes you don't get that retest, and rather than missing out a trade, we'll at least get in at market entry if we at least have 2R from that. So I'll show you a couple examples, then we'll talk a little bit about some other rules. So 2 examples here, and again, I have this kind of trading sessions indicator on TradingView and the fractals indicator for TradingView specifically. So this first example is a reversal example. We had a trend to the downside during New York session, and the PM session was larger. You can see 0.37% versus 0.35%. So we're expecting a reversal to the upside. The first criteria we're going to look for is a sweep of any New York PM low, because we're looking for longs. And so you can see here after the after Tokyo market opens, which we'll have an indicator on FX Replay to be able to see exactly when that is. But after Tokyo market opens, you want to see a lower low in this case that sweeps a New York PM low. And after that, we're just going to be looking for an inverse fair value gap, which we finally get right here with this candle that closed above this fair value gap. It's pretty small, but it is valid in this case. And since if we targeted out the New York PM high, it was only like a 1.44R in this case. I think I just targeted out the next one to give us 3.26R in this case. But entry on the retest of the fair value gap, stop loss at the recent low, and kind of let it play out. So that's kind of a reversal example. And I'll show you guys a continuation example. So this day we had nice upturns to the upside, and the AM session was much larger than the PM session. So we're going to expect continuation of trend, expecting price to continue above this previous high and potentially higher. So what do we need to see first? We need to see a sweep of one of these New York PM lows. So we did get this one swept here, but there weren't any inverse fair value gaps. So this next one, we got some sweeps, and we saw a nice inverse fair value gap right here. So we put our entry on the retest of the inverse fair value gap, stop at the low, and we'll go ahead and target out this most recent high for continuation for like 2.76R in this case. Just to stress the kind of lower lows and higher lows, you really want to see like a lower low, like a valid liquidity sweep before the inverse fair value gap is formed. There are some times when you'll kind of see like a higher low, and there could be an inverse fair value gap created like from this move right here, but I'm going to be focused only on instances where we see a true kind of lower low, really nice liquidity sweep, and then hopefully swift kind of move back to the upside to create the inverse fair value gap. And then vice versa for shorts, we want to see a higher high followed by the inverse fair value gap. So it's kind of one of the slight details I wanted to share with you guys for this. A couple other rules on this is in order to make sure we're not over trading, we're going to only take one trade per New York PM high or low that's swept, and max 2 trades per day. I guess the maybe one exception is if the like extreme high or low of the New York PM session or range is swept, then obviously there's not multiple highs or lows after that. So if you have to take 2 trades to try and catch the move, that's fine. But if it's within that range, then just take 1 trade per low, and if it's a loss, then wait for another higher low to be swept, and you can try again. Another kind of unique rule that I found out from doing a little optimization on this is sometimes the open to close for the New York market is like pretty small. And so I did some optimization from the backtesting I did a little bit before this. And basically if the distance between open to close is less than like $2, like it's a pretty small range, like it's pretty flat, then go ahead and use the most recent trends, which is basically from the PM trend instead. So from the noon to 4 to help you identify, what trend you want to use for it. And if both of them are flat, then obviously just don't take a trade on those days. Last rule, if there's multiple fair value gaps in a row, which one do you use? I usually like to use the one that's got the best risk to reward. The one exception is if there's a really small fair value gap, then just go ahead and extend that fair value gap to include both of them. So you have, a proper fair value gap basically. But otherwise, if there's multiple, just go ahead and use the one that gives you best risk to reward. Got the checklist for you guys that you guys can use. So obviously, first thing we've got to identify, what trade direction are we looking for today after comparing the ranges and the previous New York trend. We need to see a New York PM high or low swept away from our trade direction with that higher high for a short or lower low for a long. as that potential inverse fair value gap forms, you can already start marking out your potential stop loss and 2R plus take profit, so that when that inverse fair value gap is confirmed, you can very easily see if you need to see, and this says 4R, I need to fix this PDF. It's going to be a market entry as long as it yields more than 2R. So this is something I need to fix. I had it at 4R earlier, and then I did some optimization, and 2R is the threshold we're going to be using for market orders. So I've already gone through those examples. Let's go ahead and pivot over to FX Replay. And I wanted to show you guys, obviously, I guess in this case, the trading ranges indicator or trading sessions that we had on TradingView isn't available in FX Replay. And so a lot of people sometimes get frustrated. Oh man, this indicator isn't in FX Replay. I can't test this strategy. But there's a lot of opportunity to be creative with FX Replay and kind of poke through the indicators that do exist and see if you can kind of capture the same information. And that's what I found in this case. There's actually this indicator called ICT indicator by FX Replay. It's got a lot of really cool information in here, but ultimately all I care about is that I can see two ranges, and I can see kind of at the bottom what are the size of each of those, and so I can very easily compare, you know, was the AM range bigger than the PM range. And I'll kind of show you guys settings real quick just so you can see. So I pretty much unchecked everything except I thought the opening price for New York could be helpful, so you can kind of see where to start your trend line. But then down here at the bottom, I basically just customized these two ranges. So 9:30 to noon for our morning range, and 12 to 6 for our PM range. And yeah, just got the label at the bottom, so I can see, you know, like you can't change the labels, but you can pretty easily see here. This first range is kind of the AM range, and this second range is our PM range. You can see here, obviously, it's pretty easy to see visually as well, but you can see the AM range is bigger than the PM range in this case. So this is the indicator we're going to be used to kind of compare the two ranges. We've got the fractals indicator that's going to help us easily identify those highs and lows for the sweeps. I've also got the fair value gap indicator to help us, you know, see the fair value gaps. And then lastly, I have the session indicator by FX Replay. And so I'm basically going to be marking out the Asia session in UTC. So you can see the settings I have here for that. And yeah, that'll basically help us see when the Tokyo session is going to be. And the way I have this set up should translate to pretty much any daylight saving times instances. The only thing I will say is I have my go-to setting up here set to like 1900 right now. And during the like summer months, if you're testing, I think like March to November, or when exactly daylight savings is. Sorry, I'm getting some messages. So basically, during the daylight savings months, I think you'll need to change this to 2000 hours because it's going to be a little 1 hour later, but you'll be able to see with the session indicator by FX Replay and adjust this when you get to those times. So now that we have all the indicators set up, let's go ahead and dive into it. I'm going to be doing a little speed test and kind of show you guys what I was able to get through about 2 months of backtesting. So there's basically two trades on this day I'll show you guys, and I'm going to kind of go through to where the trades happen. So we have a downtrend during the day from the open to the close. The PM range is smaller, so we're going to be looking for continuation to the downside. We've got a sweep of a New York PM high followed by inverse fair value gap. So what we're going to do is enter on a retest of this inverse fair value gap. We're targeting out the low of the New York PM session, which gives us at least 2R. So I'll kind of put my position tool here, place order. I like to use a 1% of initial balance. This is a limit order in this case. We'll go auto break even after 2R. I don't know if I mentioned that, but that's basically what we're going to be using for trade management. I found that going to auto break even after 2R is kind of a good thing to do. So I'll make sure that's updated in the PDF for you guys as well. And then last thing, you can use tags to help analyze the analytics a little better as well. So this is a continuation, so maybe we can use a tag to kind of differentiate between those two. So let's see how this one plays out. Get tagged in, and unfortunately this first one was a quick loss, but it's totally fine. So I'll show you guys a couple more inverse fair value gaps that showed up later this session and why I waited for the second one. So get to right there. All right, so we did have another sweep of a New York PM high, so we could take another attempt at this trade for the day. And the reason I didn't use this earlier inverse for value up, even though it was confirmed by this candle closing here, is we didn't have that higher high. We were kind of forming equal highs here until we got a sweep of all of these, giving me the higher high followed by the inverse for value gap. So that's why I'm waiting for the higher high in this case. So let's go ahead and mark out our stop loss and take profits. So stop loss is just going to be the recent swing high. Take profit's going to be the New York PM low, and it looks like we can get over 2R with a market order in this case. So we'll go ahead and do that instead of a limit order. So sell markets, we're going to auto break even after 2R, and we will say this is a continuation. See how it plays out. We almost gets stopped out break even. It didn't quite go over 2R. We got to 1.75R, so we weren't break even yet. And good thing, because it came back up and then ultimately ran to our take profit nicely. So 1 loss and 1 win on this first day. All right, so this next day we have a uptrend from the open to the close. The PM session is smaller than the AM session. You can see here 116 pips versus 177. Most days you're going to have that where the PM session is smaller, but it is important to make that comparison to see if you're looking for continuation or reversal. So since we're looking for continuation of this uptrend, we need to wait and see a sweep of a New York PM low, which we have right here. Honestly, this one's probably a little subjective. It is like 2 candles technically after the 4 PM window, but I figured it was probably close enough. I could give it a shot in this case. So we have a inverse fair value gap confirmed right here. And let's go ahead and mark out our kind of low and high of this potential trade. We get our stop loss down here at the recent low. And since we're already above the New York PM high, we could probably go ahead and target out this New York AM high instead. And since we can get over 2R from doing a market order, we'll go ahead and do that. So we're going to be doing a market order. This is going to be auto break even after 2R. We're in a continuation, and let's see how this one plays out. It stops to break even now. We almost get stopped to break even, and then eventually it runs to our take profit. So really nice win this second day. And you can see on the chart here, the Asia session, it basically helps mark out the hours for Tokyo that we'll be using for the strategy. One thing, sometimes when you go to the next session, the ranges don't immediately populate. All you got to do is click forward like 1 candle, and you'll be able to see them pop up. I don't know why it does that, but that's basically just how you get them to show for you quickly. So I don't think there were any trades on this day. So this next day, we have a downtrend from the New York open to close. We have the PM range smaller than the AM range, so we're looking for continuation to the downside. We need to see a sweep of a New York PM high, which we have here, but I need to see some kind of higher high before I'm interested in this trade. So now that we've got our Tokyo open, we've got a higher high, and now we have an inverse fair value gap. So we did get slightly higher than this kind of in between high right here. We did make a higher high followed by the inverse fair value gap. So we're good to take this trade. Go ahead and map out our stop loss as the recent high. Take profit will be the New York PM low. It looks like we don't quite have 2R from this New York PM low, so we'll go to the next one down here for a potential 2.38R trade. This will be a limit order since the market order didn't give us at least 2R. So auto break even after 2R, and its continuation, and see how this one plays out. We got tagged in and pretty much immediately went to our take profit. So again, having the correct bias with the data with this strategy gives us an upper hand, kind of being able to just predict, with a higher likelihood where the market is likely to trend, and then this entry model allows us to kind of catch those moves after they happen. We will have losses though, as you'll see shortly. So I don't think there are any trades on this day. This next day, we had a downtrend with a smaller PM session, so we're looking for continuation to the downside. We got a sweep of the New York PM high, followed by inverse fair value gap. And again, there was an inverse fair value gap right here that forms once price closed below it, but we were kind of just engineering liquidity right here. There was no clear higher high. There were just a bunch of equal highs, which, as you guys know from previous videos, draws on liquidity are often kind of equal highs. So I wanted to wait for that higher high before I saw a nice inverse fair value gap. So we got that right there. Let's see if this one's going to be a market or limit order. So stop at the high. Target is going to be our New York PM low. Looks like we can get over 2R with a market order. So we'll go ahead and do that. Sell market, auto break even after 2R. It's the continuation. See how this one plays out. Another nice win. So starting off really nicely. Go to next session. So it looks like a couple trades on this day. Same thing, we were in a downtrend, and they're a little closer this time, but 72 pips. The PM session is smaller, so we're going to be looking for shorts on this day. So we were looking for higher highs, followed by an inverse fair value gap, which we get right here. So we've kind of swept the high of the entire New York PM session, and we can look for a short here. I believe this one would probably be a market order if we're targeting all the way down here, expecting price to get down here. Yep. So we'll place the order here, sell market, auto break even after 2R. And this is continuation. And unfortunately, this one was lost. Again, this is kind of the exception to the rule where I will allow like one more attempt, since we're kind of already beyond the New York PM range. I'm going to allow at least 2 trades in this situation. If we were still within this New York PM range, I would also need to see a additional low or high swept in this case. But since we're already past the extreme high of the range, we'll go ahead and take 2 stabs on this one. So see if we get another higher high followed by inverse fair value gap, which we get right here. So you can see inverse fair value gap. This would be another market order. It seems like a pretty ambitious take profit, but you'll be surprised every now and then we will catch some pretty big trades with this this model. Auto break even after 2R, continuation. Fortunately, in this case, it was a very quick loss. So a couple losses on this day, but not really worried about it since our wins are going to be bigger than the losses. This next day is, I don't think there were any trades this day, but I did just want to mention, we went ahead and we would have used the PM trend for this this day, because if you click on and I'll show you guys kind of how I drew these trend line. I just use this like arrow indicator. It's one of the indicators, or one of the drawing tools in this kind of brush section. It's got a nice arrow on the end of it, so you can easily draw the trend. I'll just kind of draw it from the open to the close, and if you click on the arrow over here on the right, you can actually see the dollar values of the kind of beginning and start of it. And so since we have less than a $2 trend here, like it's like $1.50 in this case, I think so one of the rules I have is basically if the open to close is pretty flat, then use the more recent trend from the New York PM session. In this case was a very clear kind of uptrend. So you would have been looking for longs in this day, but ultimately we never came back and swept any of these New York PM lows, so there just wasn't any trade on this day. This next day, we have a downtrend followed by a smaller PM session than the AM session, so we're looking for continuation to the downside. We waited for a sweep of this New York PM high, and then we eventually, took a little while, but formed a higher high with an inverse fair value gap. So most likely a market order on this one, since we can get over 2R doing a market order instead of a limit or 5.84R with this one potentially. So let's see how this one plays out. Auto break even after 2R. This is continuation. And so this one we did play out. All right, so unfortunately, we got another loss. So we've got 3 losses in a row, but that happens with pretty much every strategy. It's just part of the game. All right, so this next day, again, these are pretty close, but we do still have a smaller PM session than the AM session with the downtrend, so we're looking for a continuation to the downside. We've got a sweep of a New York PM high, followed eventually by a inverse fair value gap here. Let's see if we need a market or limit order in this case. So if we do a market order, we would get 2.07R. So we'll go ahead and do that instead of waiting for a retest. So market order, auto break even after, we're pretty much going to be at our target if the auto break even's hit in this case, so I won't worry about it. Let's see how this one plays out. Nice, very quick win. And this is a great example to show you guys. I might need to zoom in a little bit, but we never got a retest of this inverse fair value gap. It came up a little bit, but didn't quite. So this is the entire reason why I've kind of made this rule. As long as you can get at least 2R with the market order, go ahead and take those trades. Otherwise, you might miss out on some if you're just waiting for the retest. So this next day, same thing, downtrend, smaller PM range, looking for continuation to the downside. So we've got a sweep of a New York PM high, looking for a higher high, and then waiting for a bearish reversal to invert that fair value gap. Looks like we do have a fair value gap here, but we don't invert this first one. However, we do have one shortly after it that we do invert right there. So we look to enter after this fair value gap's inverted. I think we can get more than 2R with the market order, so we'll go ahead and do that. Sell markets, auto break even after 2R. It's a continuation once again. Let's see how this one plays out. So this one ended up being auto break even. So as you can see here, we went up just over 2R, 2.06R, at which point our stocks went break even. And then it came back and tagged us out break even on this case. All right, so this day is probably our first example where we're looking for a reversal. As you can see here, the PM range was 94 pips versus 69 pips in the AM range. So while we had an uptrend during New York session, we're expecting a reversal in this case. So we waited for a New York PM high to be swept, followed by a higher high and an inverse fair value gap. So we got all three of those things right there. And I believe we can definitely get over 2R with a market entry at this point. We would be targeting the New York PM low. So we'll do a market order. We'll go auto break even after 2R. And this one we're going to use the reversal tag because it's a reversal based on comparing the ranges. Some of these can take a little while to play out, but unfortunately this one ended up being a loss. All right, so this next session we had a downtrend with a smaller PM range than the AM range. We're looking for a continuation to the downside. Had to wait a little bit to get a sweep of a New York PM high, and we got that with a lower low. This is one of those cases where we did have two fair value gaps back to back with each other. But as you can see, if you select this, I like to use the flat top bottom. If you look at the distance of it, it was over 20 cents, so we can go ahead and just use this first fair value gap that was created. I think we might have actually inverted it with this candle just before. Let me just double check the levels. 2030.13, not quite. It didn't close until this next candle, so we may need to look for a retest. We'll see what we can get using the most recent high, targeting the PM low. We can get over 2R, so we're good to do a market order for this case. Sell market, auto break even after 2R. This is a continuation, and see how this one plays out. Nice win. So we've had a few losses, but a couple wins are going to make up for those pretty quickly. All right, so this is another day where the open to close of the New York session was pretty flat, like almost like the same exact price. So we want to use the more recent trend in this case, which would be the New York PM trend to the downside. We have a smaller New York PM range, so we're looking for a continuation of that downtrend. So we have sweep of this New York PM high, followed by a higher high and an inverted fair value gap. So we can look to enter after this fair value gap's inverted. We can get over 2R going for that PM low. Make sure you have the levels right. So market order, auto break even after 2R. We'll say this is continuation and see how this one plays out. Wow. I think it was auto break even. Yeah, came pretty close to our take profits. Got up over 2.82R in profit, but ended up being a break even trade. Going on to the next day now, we have a pretty great, strong downtrend, as you can see here. Big downtrend from the open to the close, smaller PM range, looking for continuation to the downside. We do have a nice higher high liquidity raid here, followed by inverse fair value gap. So we're probably just going to do a market order on this close. We got 4.75R potential. So we'll go auto break even after 2R. And we'll do continuation in this case. See how this one plays out. Stops are break even now. And ended up being a break even trade. So few instances where the break even has saved us from some losses. Potentially could work on optimizing, maybe some partial trims at some point, but I also think there's it's a lot easier to just let the trades play out with kind of simpler risk management more often than not. This next day we have a uptrend from the New York session with a smaller PM range, so we're looking for a continuation of the upside. It took a little while for us to get a sweep of this New York PM low during Asia session, but we did eventually get it here with a nice inverse fair value gap. So I think this one would probably need to be a retest, a limit order, using the most recent low, targeting the kind of local high for continuation. Yeah, I don't think it would have been 2R if we did a market order. So this one was a limit order on the retest. Auto break even after 2R probably doesn't matter because we're going to be pretty much at our take profit at that point. But let's see how this one plays out. We tagged in and really nice. Pretty much went to our target immediately. It's a nice win this day. All right, this next day we got our uptrend during New York session with a smaller PM range than AM range. So looking for continuation of the upside. We did eventually get a sweep of this New York low with a slightly lower low. So we can go ahead and give this one a shot. See if we need to do a market or limit order. Looks like market order gives us over 2R. So we'll do a market order, auto break even after 2R, and continuation. Ended up being a quick loss. I think we could have looked for another sweep later in the day, but I don't think it ended up happening. Remember, only one attempt per New York low, and we never swept this kind of before Asia session was over. All right, this next day is another example where the open to close of New York was pretty flat, so I wanted to use the more recent trend from the PM session, which is a pretty clear downtrend. So we're looking for continuation of the downside since the PM range was smaller, 43 pips versus the AM range. We did eventually get some sweeps of these New York PM highs. We got a higher high here with the inverse fair value gap. So if we use the most recent high as our stop loss and look for continuation, we can do a market order here. Markets, auto break even after 2R. Continuation. Unfortunately, that one ended up being a quick loss and actually went a little too far. We have another attempt at this one. So we did have that quick loss, but we did end up sweeping the overall New York PM high, so we can have a second shot at this. And we did form another inverse fair value gap. So while this first trade was a loss, we can take another stab at it right here, using the prior market order in this case, looking for the low for our take profits. So this would be a market order, auto break even after 2R, and continuation. Stops to break even, and really quickly to our take profit. Love to see those trades. All right, this next day, kind of same thing, pretty flat on open to close. So let's use the more recent trend for the PM session. We're looking for continuation since the PM range is smaller. We did eventually get a sweep of this New York PM low over here, followed by a nice lower low and an inverse fair value gap. So we can go ahead and give this one a shot. Using the most recent low as our stop loss. Looks like we can get over 2R with a market order, so let's go ahead and do that. Auto break even after 2R. Discontinuation. Ended up being a nice win. Came pretty much right to our take profit and then reversed after it took this liquidity. All right, so this next day we have a nice uptrend from the open to the close. The ranges were pretty close, 58 pips versus 67 pips, but the AM range was slightly bigger, so we're looking for continuation to the upside. We eventually, during the Asia session, did sweep one of these lows, but there was no real fair value gaps created in that initial one, so we waited a little bit later for this sweep of these later lows, and we had an inverse fair value gap right here. So using probably a market order in this case, with the most recent stop targeting the PM session high, we can potentially make sure I have my entry at the right place. Almost like a 5.3 hour trade if we catch this one. So buy markets, continuation, and let's see how this one plays out. Awesome win. Really great. We're on a nice win streak lately. All right, so next session we got a downtrend during New York session with a smaller PM range than the AM range. So we're looking for continuation to the downside. We have this New York AM high here, or PM high here, that we did eventually sweep with a kind of higher high during the Asia session with a inverse fair value gap. So we can look to enter probably on a retest of this in this case. They're pretty close, but it doesn't matter. And in this case, we don't really have like another local high to go off of for a 2R, so I'd probably just go for a fixed 2R in this case, using a retest. Make sure I have my level right. Right there. So I'll shift this guy over right there, place the order. This is going to be a limit order. Auto break even after it. We're only targeting 2R, so auto break even doesn't matter in this case. See how this one works out. Almost tags our stop loss and ends up being a nice win. So yeah, we're doing well. All right, so this next day we have a pretty flat New York AM trend, so we're going to use the more recent trend from the PM session, which was a downtrend. And so we're looking for continuation to the downside. We have a sweep of a New York PM high here, followed by a higher high with an inverse fair value gap. It was pretty close, but we did just invert this fair value gap right here. So using the high as our stop loss and the low as our take profit. Let's see how this one plays out. This will be a market order. Auto break even after 2R. And continuation. I think this one ended up being like an immediate loss, unfortunately. Just barely whipped us out. And we would have to come all the way back up here to have another shot at this one. And I don't think we got that on this day, unfortunately. All right, so this next day, kind of same thing. We had a pretty flat open to close, so we'll use the more recent trend from the PM session. The PM session was smaller, so we're looking for continuation to the upside. We did see a sweep of this New York PM low, followed by inverse fair value gap. So let's see, I'm probably going to need a retest in this case, using the recent lows, targeting out this New York PM high. So we'll do a limit order in this case. Limit order, auto break even after 2R. This is going to be continuation. See how this one plays out. So we just got tagged in. Almost hit our stop loss, ended up being a nice win. Love to see that. All right, so this next session was pretty close. If you look at the open to close, it was like $1.50. So just under our $2 threshold to use the kind of AM session. They ended up being the same. The PM session was also in an uptrend, so it really didn't matter in this case. But either way, looking for continuation to the upside since the PM session's smaller. We eventually got a nice sweep of a lower low followed by inverse fair value gap. So let's see, I think this one probably would need to be a retest. Yeah, we can't get 2R with a market order, so we need to place the entry on a retest of the fair value gap. So we'll do a limit order, auto break even after 2R, continuation, and see how this one works. Okay, I thought we had a loss, but it stopped just shy of our stop loss. So we had that one that barely wicked us out earlier. This makes up for it by barely missing our stop loss before it ran into our take profit. All right, so this next day is another example of a reversal. We can see here the PM session was 53 pips versus 46 pips. So even though we were in a downtrend, we're going to be expecting price to come back up here and potentially higher for a reversal of that trend. We waited for Asia session to open, and we got a lower low, followed by a nice, pretty large inverse fair value gap that was inverted right here. So we're probably just going to do a market entry at that point using the most recent low, which is right here, and targeting out the New York PM high. This would be a 5.4R trade if we hit it. I'd be pretty happy if we did. Auto break even after 2R. This is going to be a reversal, and let's see how this one works out. Stops to break even now and hit our take profit. So as you can see, having the right bias makes all the difference with this strategy, and making sure to accurately compare the ranges can give you that edge to see where the market is likely to trend next. I think on this day, yeah, the ranges were literally like within $1 of each other, so I wasn't even going to try to guess which direction. It was like 69.8 versus 70.33, so I just wouldn't trade this day. All right, so this next day we have a nice uptrend from the open to close with a smaller PM range, so we're expecting a continuation of that trend over the next day. It took a little while for us to get a lower low, but we did get that with a nice inverse fair value gap here. So we're going to probably do a market order after this fair value gap was inverted. We're targeting this New York PM high for almost 4R. Go auto break even after 2R. This continuation. Let's see how this one plays out. Alright, stops to break even now. We got stopped at break even. So we had to wait for this one, but eventually ended up being a break even trade after it went up a little over 2R. Saved us from another loss. Alright, so this next day we have another reversal. We had a nice uptrend during New York session, but as you can see, this PM session was 70 pips versus 50 pips in the morning. So we are expecting a reversal for price to kind of trend back down here. We waited for a sweep of this New York PM high with a higher high formed, as well as an inverse fair value gap. So we got that there. We're going to do a short, probably a market order in this case, targeting the PM session lows, so over 4R if we hit this one. Auto break even after 2R. This is a reversal. See how this one plays out. Unfortunately, a quick loss. We can see if we have another attempt at this, but there's not a whole lot of time left in the Asia session. Yeah, so there was eventually another inverse fair value gap, but it was after the Asia session, so just the one loss on this day. So on the last day of the month for February, we had pretty flat trends for both the ranges. So again, I probably wouldn't trade in this day. So let's go ahead and take a look at our analytics now that we've done a couple months. So overall, we've got almost a 60% win rate with this strategy, which overall pretty much aligns with the data that we were initially looking at, hoping at about 2/3 of the time we would have the right bias. So really happy with that rate. I did have to run some optimizations and fine-tune a few rules to make sure we caught the trades we wanted to, and we're following the right trend. But yeah, really happy with this equity curve. Did see a slightly flat period kind of in the middle here with the wins offsetting losses, but ultimately we got a little over 32R in 2 months, which is amazing. Like I'm really pleased with this strategy, but it's really cool. It combines kind of data to give you an edge just from a general bias standpoint with some technical analysis that hopefully works out more often than not as well. But overall, 59% win rates. Our average win was 3.17R. Our max one was 5.38. We had 6 break-even trades, which mostly saved us from losses. I think we might have had a win or two. I think mostly saved us from losses. The average trade time is about 3 hours for this strategy for the winners. The average loss about 1 hour and 40. So definitely it takes a little bit longer for this strategy to play out. But that's why the less trade management, probably the better. So you can just kind of let it play out and see what happens. We did have a lot more sells than buys, but the win rate was a lot higher during buys and sells. I think, again, probably similar to what I saw in the data I collected, gold is probably trending to the upside a bit more. But as you get a larger sample size, would expect, hopefully both of these to be reasonably decent. If not, you could potentially only take the longs, but I think you should probably take both. Overall, most of our trades were, I guess I'm on the wrong time. You can kind of change the time zones here to whatever you want. I'm in the US, so I'll kind of take a look at New York, but you could apply it to any time zone that you wanted. You can kind of see here that for the most part, we were kind of taking trades later in the day. So that's kind of when our results showed up. And looking at the day by day, it looks like Tuesdays were our best day, but pretty much every day was profitable, which is definitely what we want to see. January, we did 11R, 11.3R. In February, we got 20.9R. So overall, a little over 32R on the month. Looking through the performance calendar, we did have a great month in February, but we did have a few losses here and there, a couple losses in a row, a few break-even trades. But yeah, overall, super happy with the strategy. I'll be in the Discord if you guys have any questions, but I hope this was helpful for you guys and gives you guys that want to trade outside of New York session, something to potentially look at trading Asia session. So hope it was helpful for you guys, and I'll catch you later. See you guys.